everyone, welcome to another episode of Meet the Expert interview series. I am Susan Ho, and I'm super excited to have you here. Smarter Institute is an organization that promotes investment literacy for youth under the age of 25. Don't forget to hit subscribe or visit our website, link in the description below. Today, we have Professor Roberts joining us to talk about statistics and data science in finance. Professor Michael Robert is the William H. Lawrence Professor and the Rena Professor of Finance at the Wharton School of the University of Pennsylvania. He established more than 15 research papers on machine learning, economics, collateralized loan obligation, and other profound topics. In addition to the research, Professor Roberts has won numerous awards, including the Q Group Annual Jack Trainer Prize in 2021 and the Marshall E. Bloom Prize in 2014, 2017, and 2021. What is more, Professor Roberts has been recognized in places outside of academia. He devoted his time to establish two initiatives, the Financial Analytic Initiative, the Financial Proficiency Initiative, in addition to his teaching at the Wharton Global Youth Program, The Essential of Finance. And this is also the place where I get to meet him in person. Let's give the warmest welcome to Professor Michael Roberts for joining our interview today. Good evening, Professor Michael Roberts. How's your day?
It's been good so far. How's your day?
It's been great. And
Excellent.
first of all, I have to thank you for coming to my interview today.
My
And
pleasure.
and I noticed that you have a long track record in the area of finance. And how would you say your interest in quantitative analysis came about, and what do you hope to achieve in this area in the long term?
I guess I was very interested in math and statistics in college, and I liked finance because it brought together, uh, as you said, quantitative analysis with application. And so I think it grew out of my interest in both quantitative analysis, math and statistics, and business more broadly. In college, then having worked for a few years, and then ultimately in grad school and thereafter.
Well, that's actually interesting to hear because a lot of high school students are actually fear of math, but in the end, some will choose the STEM like career in the
Mhm.
future. And as the founder and the current head of the Wharton Financial Analytic Initiative, I noticed that you said on the website you advocate for students to develop a deeper understanding of financial principles and be better prepared to engage in financial challenges through the applications of data science in finance. So, from your perspective, is the machine learning model only used in short sales, or is it also useful in the long-term trading?
Oh, so data science for finance, you're referring to a course that I teach at Wharton or have taught. Um, that's much broader than just trading. So when we think about financial decision making more broadly, we use financial models to make those decisions. For example, when companies make decisions about capital budgeting or how to invest, they use discounted cash flow analysis, just like equity analysts would, or fixed income analysts. So we have all these models that we use for decision making, but the value of the models is determined largely by the assumptions or the inputs into the models, what we assume about future revenue and expenses and taxes, or in a fixed income sense about future coupon payments, or in equities maybe future dividends or earnings. And so all these assumptions about the future feed into our financial models. But if we have bad assumptions about the future, but poor projections, well, it doesn't matter that our model's right, it's going to spit out garbage, right? Garbage in, garbage out. So data and analytics, things like machine learning, things like artificial intelligence, are really useful mechanisms for generating predictions about what's going to happen. And so it's the combination of finance principles, understanding finance and what drives value, with the ability to gather, process, and analyze data so we can feed appropriate inputs into our models to make better decisions. That's really what data science for finance is all about. And you mentioned machine learning in the context of trading. That's just one application where data and algorithms can be useful, but it's much broader than that.
And do you think that the prediction can be used in a long term, for example, like 5 years to 10 years?
So that, yeah, I mean, it depends upon the situation. So if I'm valuing a 3-year bond to see if I should buy it, sell it, or do something, take some other action, I just need to figure out the next 3 years in some sense. But if I'm valuing a company or a stock, or I'm thinking about a strategic change or restructuring to my company, there is no end date, right? I mean, in some sense, you have to forecast forever. Now, we make some assumptions to make that feasible. Obviously, we can't forecast a company's earnings into the infinite future, at least not period by period. So we make some assumptions to help us with that. But strictly speaking, there is no end date in some sense to our forecasts. So the situation will dictate how far we need to forecast out.
And like attaining the knowledge and the know-how to design this model is definitely like a key to success. And on this front, once the student finish the model, how often does it need to be reviewed? And is there any specific types of events that signals us to modify it?
So it needs to be reviewed all the time. I mean, the frequency depends upon sort of the frequency of its use. If we're talking about someone who's trading, that could be that could be a daily basis, right? What did my model say? What happened, right? If it's a company making acquisition decisions, maybe that's once every year or once every quarter, maybe. So the frequency really depends upon the situation. Um, yeah, I think that gets you. Did I miss part of that question though?
No, that's really good. Also, I wonder, like, for most of the time, uh, like students who graduate from the
Oh,
university
wait,
and
sorry, I'm gonna
go,
interrupt.
oh,
I
go
didn't
ahead, go
answer
ahead.
your question. No, I apologize. I didn't completely answer your question. So I think the best way to learn, so given whatever frequency with which you're reviewing your model, that's fine. But I think the best way to learn from a model is when it fails, right? That's how
Oh,
you really learn. Um, what's missing, what's wrong, what's important. And so it's when the model fails is when you really learn. Now that's a double-edged sword in the sense that you learn a lot, but it could also put you out of business. And so the
yeah.
trick there is really managing the risk of whatever you're doing so that any failures of your model are survivable in some sense. So you can learn and move forward and improve upon what you've done. Sorry for the interruption there.
No, but that also brings me on to the next question, because I've seen like a lot of students saying that often like trading requires leverage to make it more meaningful. So does the machine learning also falls under this criteria?
So, so I think we're talking about a couple of things there. So when you say trading and leverage, that just means to my ears that you're trading with borrowed money. You're borrowing some money to trade. So tackling that, you don't need to use leverage to trade. And there's ways to get leverage. Right, when I trade stocks, I can buy a stock with all my money, or I can buy it on margin. That is, borrow some money to buy stocks. But of course, to borrow money, you need collateral. You can also get leverage through derivatives contracts. So if I trade futures or I trade options, there is leverage implicit in those trades. And so you can get leverage indirectly through derivatives contracts. But you don't need to use leverage. What leverage does is it increases risk. Okay, fundamentally, leverage increases risk. Now, with that, it increases expected return, right? Higher risk, higher reward. But that's what leverage is doing. And many successful investors trade with no leverage. You don't have to have leverage to be a successful investor.
So for quantitative analysis, it's not only about using leverage to make it
No,
more
no, no, no.
meaningful.
Not at all, not at all, not at all, not at all. And that's what I meant by separate, right?
Mhm.
How you trade, how you fund your trades, whether with cash or cash and debt, whatever it is, isn't independent of how you assess or evaluate your trades with, say, machine learning models. But they're two distinct concepts. And so there is no sort of one requires the other.
Right. And in 2021, you started the Financial Proficiency Initiative with the objective of emphasizing proficiency instead of literacy. So, how would you recommend high school students to learn financial analysis as a beginner?
So it's a great question. I think, okay, I need to be careful because, my experience is in some sense limited since there's so many financial literacy programs all across the globe. I couldn't possibly comment on all of them. I've seen some wonderful programs. I've seen some less wonderful programs. Where I'm coming from is that I see what our students at Wharton are exposed to and what they learn. And it's my belief that, at least certainly at the introductory level, there's no reason high school students can't be exposed to it. In fact, they are in our Wharton Global Youth Program.
Yes.
Right. So I think high school students should be exposed to the very best material, as opposed the very best finance curriculum and material and delivery, as opposed to watered down, partial versions of financial literacy. I know they're capable of understanding it. I know they're capable of applying it. I know they're interested in it. And so that's what I mean by financial proficiency, and why I hope more students will engage with that, as opposed to financial literacy, which is often, but not always, this is what a credit card is. This is how a credit card works. This is what a bank account is. This is how a bank account works. But that's not going to serve people well in the future. What's going to serve them well is being able to tackle the challenges they face in their personal as well as professional lives. So, how much should I save? Where should I save it? Should I put it in the bank? If I put it in a bank, should I put it in a savings account? Should I put it in a certificate of deposit? Which certificate of deposit? The 6 month, a 5 year? Should I put it in stocks, bonds? How much? Right? These are the types of questions that people are confronted with. And most financial literacy programs that I've seen do not equip people to answer those questions in a satisfactory manner. That's why I believe in financial proficiency. Now, how can you get financially proficient? That's the challenge that I'm, that's the challenge, is making, in some sense, what our Wharton students have access to available to a much broader audience. Now, I've sort of done that many years ago through Coursera and, online learning. My hope is we can continue with that, but on a broader and better scale.
Right. And as a Q enthusiast, what would you say are the advantage and the disadvantage of learning this as a pathway to financial proficiency?
So as a what enthusiast? I'm sorry.
Like a quantitative
Uh,
analysis enthusiast.
well, so here's the beauty of finance. You can make finance as technical or as quantitative as you want. Many branches and areas within finance use graduate level mathematics, really um, very technical material. But for I'd say 90% of what we do in finance, if you can just understand arithmetic, you're going to be fine. Uh, as we discussed earlier, I think the real value comes in the ability to analyze data for the use in our financial models, that most of which only require arithmetic. Uh, so, how quantitative, how technical you want to get is really up to you, up to the user, the user. I would, and every high school student is capable of handling arithmetic, maybe a little bit of introductory algebra, but that's not even necessary. Some basic statistics. This is all within the grasp of high school students. And if you want to go beyond that, right? If you want to really dive in and become a finance professional, you have the groundwork under you to learn those more advanced subjects.
And do you think that um, quantitative analysis is somehow limited for high school students because they do not have the access to the college level knowledge as well as the uh, like the capital to start an experiment if their model works?
No, so there's lots of no, so two things. First of all, there's material all over the web. It's everywhere. Not all of it's good, but quite a bit of it is. And so there, getting access to materials, I've got a manuscript up on my website that's freely available. People are more than welcome to download it, look at it, read it, send me feedback. So there's lots of material out there for people to learn that's free. In terms of implementing or trialing models, there's lots of sites, especially in the equity space, less so in fixed income, but especially in the equity space, that will allow you to do back testing and experiment and play. So I think the resources are out there. They can certainly be improved on that latter front, right? But there's lots of opportunities. It just takes a little bit of effort and ingenuity on behalf of people who are interested in going down these paths.
Right, that's a really good news for those high school students who are listening to this interview. And last but not least, do you have any tips for them to start their financial proficiency journey or avenues for them to engage with your work, such as data collection, research, or other opportunities?
Yeah, I think the best way to learn something is to have to teach it. That's been my experience. But the second best way to learn something is to do it. And so if you want to trade equities, do it. And if you don't have any money, find a platform where you can, they'll give you a fake $1 million or some fake capital to start off with, and you can trade and experiment and see what happens. That's really the best way to do. And you can complement the doing with the studying, right? So you can read a book, if you don't know where to get started, start with reading a book or something online, and then go try and apply it. And I think that back and forth between learning and doing and studying and learning and doing, that's where the real education comes in. Yeah, I mean, this is so cool. Just do it. Right? And I'm not saying to go gamble, use your own money. I'm not saying that. Yeah, as I mentioned, there's lots of ways to engage with finance without money, so you can learn how things work.
Yeah. And also on your website for the Financial Analytic Initiative, a lot of my audience noticed that you take on students to do like a project where you will mentor them and then they will have like a final presentation.
The students in that class, so this is for my class, but the students will pick a topic. For example, one group just wanted to figure out how Tesla could optimally allocate their recharging stations across the nation and how they could expand or add new ones in sort of the optimal manner for both the customer as well as Tesla. That was one project that a group of students did. Another project was how to find the cheapest airline ticket for a flight, when you should buy, and all these different ideas. That's what I love about this sort of open-ended project. Another one was trying to figure out um, how to trade artwork, how to buy artwork, or buy artwork as an alternative investment to complement an investor's portfolio along with stocks and bonds. So the kids come up with the ideas. They go get the data. I sort of guide them through some of the analysis and things to look out for, questions to ask, how to construct models, and they put it together and come up with really amazing examples. I think some of which might even be on the website.
Yeah, they are.
Okay, great. There you go.
Well, Professor Roberts, thank you again for the interview today. And everyone, I hope you learned something from the interview and have a great day. And
I
don't
did,
forget to
and
join
thank you.
us on further
Thank
guest
you.
speaking events. So thank you again, Professor Michael Roberts. And yeah,
Thank you. Take care.
you too. Bye.
Bye.